at up 5.5 basis points right now, as the Federal Reserve's Beige Book showed that the U.S. economy was little changed in recent weeks. Joining me right now is Bolvin Wealth Management Group President Gina Bolvin. Gina, good to see you. Thanks very much for being here. How much of an issue are these spiking interest rates for stocks?
Well, the spike in interest rates are really doing some of the work for the Fed. And what we're looking at today in the market, Maria, is what is Powell going to say at noon? Is he going to continue to say what other Fed officials have been saying, which is that the interest rates going up are doing the work for the Fed, and that they are probably not going to raise rates in November and December, but the market's pricing in a 50-50 chance in January.
Yeah, and Tiana, that's been the story in terms of Federal Reserve officials. The messaging out there as the market has done the work for the Fed. Maybe we don't need another rate hike in the October 31 meeting or the December meeting. Jump in here.
Yes, and also we see that finally inflation expectations are thankfully deeply anchored, right? Nobody's expecting them to change the target to 3%. But one of the fears that I think we have is that bond markets are going to cease to be responsive with the Fed no longer a major buyer of treasuries, right? Powell has made very clear he wants to keep that balance sheet shrinking, not growing. Is there a crisis scenario where we hit recession territory and the Fed's willing to cut, but they won't purchase those treasuries and there's still just a mass treasury sell-off?
I don't think that we're heading into a recession. I mean, if you take a look at even last night, Netflix earnings, I think that points to the strength of the consumer, that they're raising rates. They've had good earnings. And, you know, we're really looking also at retail sales. We've seen a blowout retail sales report earlier this week, and it was very broad-based. So we think it's going to be a pretty good earnings season as well. And stocks are holding up very well in the face of historic rate hikes, in the face of two wars, Russia and Ukraine, and now the Middle East.
Yeah, and it's a big week for earnings this week. Of course, next week's going to be even busier, but Tesla reported a double miss yesterday. Revenue growth slowing to a 3-year low. CEO Elon Musk warned that the EV company could face enormous challenges ahead. He expressed caution about the state of the global economy. Shares of Netflix, meanwhile, as you just mentioned, higher. It beat profit expectations last night. It reported a surge in subscriber growth of nearly 9 million during the quarter. Netflix cracked down on password sharing as well. Mark, your thoughts on earnings here, because earnings will start to take the spotlight in terms of driving market activity, right?
And I think what you're seeing when you look at both Tesla, Netflix, and really everyone else is you are seeing a more price-conscious consumer. You know, more and more times you're seeing that happen. Consumers are definitely feeling the negative impact of inflation, and they are now trading down, buying, you know, stuff that's less expensive, shopping at stores that are less expensive. And you're going to continue to see that happen because inflation, in fact, consumer expectations for inflation are actually continuing to go higher. So when you look at all the consumer data, Gina, there's a huge disconnect, in my opinion, between consumer sentiment and confidence continuing to decline. Yet retail sales numbers look strong. They surprise to the upside. Consumer spending still strong. What do you make of that disconnect?
Well, I think that feeds into the soft landing narrative, Mark. You know, and you're right. I mean, consumers are trading down, but they're still spending. And I think they're going to continue to spend because the job market is still tight. It's weakening, you know, just a little bit, but the consumer has jobs. They're going to continue to spend. They're going to keep the economy afloat. And I do not think we're going to enter into a recession.
So would you buy stocks here then, Gina?
Yeah, I am a buyer of stocks here. You know, we've seen a little bit of a pullback, and we think it's going to be a good earnings season. There's a lot of reasons why we're positive on the stock market. You know, fourth quarter, there's some seasonality coming into play. On October 12th, we just entered the second year of a bull market. And 100% of the time, a second year of a bull market has been positive.
Wow.
We think it's going to be, 100% of the time. Earnings estimates have been resilient, and we think it's going to also be a good holiday season. We think it's a great setup for 2024, and we think it could be a good year for stocks and bonds next year.
All right, Gina, we'll leave it there. Thanks very much. We so appreciate your time. Gina